Good morning to Dr. Saiful and my fellow friends. My name is Liu Xiaowei. Today, we are going to share about financial statement analysis of Padini Holding Berhad and Supermax Corporation Berhad. Typically, we have included introduction, objective, methodology, result and discussion, and at the end conclusion. First of all, Padini Holding Berhad is a Malaysia-based company in consumer product sector which began operation in 1971. Padini offers many kinds of products such as formal, fashion wear and accessories. Padini has grown to become a company with two multi-brand labels, Padini Concept Store with 8 brands and brands outlet. We have chosen Padini in this assignment is because Padini is one of the most well-known brands in Malaysian multi-billion garment industry. On the other hand, we have chosen another company in healthcare sector which is Supermax Corporation Berhad. Supermax began operation in 1987. It manufactures various types of natural rubber and nitrile latex gloves and contact lenses. We chose Supermax is due to its active during COVID-19 pandemic. We have determined 3 objectives for this assignment. The first one is to provide information about the financial position and performance to external users in making economic decisions. Second is to determine the liquidity of a business by providing information about the cash flows of the company. And the last objective is to determine the company's ability to meet its short-term obligation and demand by measuring the solvency of a company. Through horizontal analysis, we found that there was an increment in cost of sales in 2018. The huge increment has caused low gross profit in 2018. In 2020, Supermax gross profit and net income hit a record high due to increase in average selling price induced by the ongoing COVID-19 pandemic. In overall, the trend for net income increased from year 2017 to 2020. By analyzing the balance sheet of Supermax, there was an increment in horizontal analysis of total current asset of the company in 2020. For total non-current asset of Supermax, it recorded its lowest data in year 2018. The total asset also recorded a sudden increment in 2020 due to the increment of its total current asset. For liabilities section, the total non-current liabilities and current liabilities both decreased from year 2017 to 2018. Then increased continuously from 2018 to 2020. The total liabilities mark is 4-year high in 2020, which recorded 133.44%. In overall, the total asset and total liabilities show the same trend from 2017 to 2020. That's all from me.
Thank you, Xiaowei. My name is Dr. Shi. Now I will continue my presentation with horizontal analysis for Padini Holdings Berhad. By analysis the income statement of Padini, we found out that the overall performance of Padini is decreasing from the year 2017 to 2020. In 2020, the finance cost has increased drastically due to the large increase in liabilities liabilities. In this year, Padini company has the worst performance. It hit the lowest net income record among the 4 years due to the COVID-19 pandemic. By analysis the balance sheet of Padini, there was a decrement in horizontal analysis of total current asset from 2017 to 2020. For total non-current asset of Padini, it recorded its highest data in year 2020, that is 330.96%. The total asset also recorded a sudden increment in 2020 due to the increment of its total non-current asset. For liabilities section, the total non-current liability and current liability both decreased from the year 2017 to the year 2018. The total non-current liability increased continues from the year 2018 to 2020, while the total current liability decreased in the year 2019 and then increased back in the year 2020. The total liability shows the same trend as total asset from the year 2017 to 2020. It marks its 4 years high in 2020, which recorded 193.52% due to the large increase in liability. By comparing both companies, they have drastically changed in the year 2020. In this year, the total asset and the net income of Supermax is higher than Padini. However, it has the lower total liabilities compared to Padini. These changes can be explained by the COVID-19 pandemic. During this pandemic, Supermax has increased its ASP and net income in 2020, while the large decrement in net income of Padini in this year was caused by the closure of their outlet in whole Malaysia due to the movement control order. That's all from me. Thank you.
In the income statement, we compare all the items with the net sales of each company on the particular year to get the ratios. From the chart, we can see that from 2017 to 2020, the ratio of gross profit to net sales fluctuates in Supermax, while it is maintained on around 20% in Padini. For the ratio of profit from operation to net sales, we can see that Supermax has increased to 32.71 in year 2020, while Padini decreases to 9.85. For the ratio of profit before tax to net sales, from 2017 to 2020, there is an increase from 9.58% to 31.91% for Supermax, while Padini decreases from 13.57% to 7.92%. Lastly, the ratio of net income to net sales for Supermax increases from 6.24% to 25.09% in 2020, while on Padini, the net income slightly decreases from 10.02% to 5.55%. We can see that during the COVID-19 pandemic in 2020, Supermax has earned more compared to Padini.
Hello, my name is CHANG. Now I would like to present about the balance sheet for both companies from year 2017 to year 2020. For Supermax Corporation Berhad, their total non-current assets from year 2017 to year 2019 are around 2/3 as compared to total current asset. In year 2020, the ratio of total non-current asset to total current asset is 4:6. For Padini Holding Berhad, their total non-current asset from year 2017 to year 2019 are around 15% as compared to total current asset. However, in year 2020, their non-current asset increased for 45.13%. For Supermax Corporation Berhad, the equity from year 2017 to year 2019 are around 60% as compared to total liability, which is around 40%. However, in year 2020, equity decreases to 48.39%, whereas total liability increases to 51.61%. For Padini Holding Berhad, their equity from year 2017 to year 2019 are around 62.65% to 77.48%. Their total non-current liability are only a small portion, which are 0.94%, 1.01%, and 2.09% for year 2017, 2018, and 2019 respectively. The rest are their total current liability. In year 2020, total non-current liability has a large increase to 31.5%, whereas total current liability and equity decreased to 13.7% and 54.8% respectively. That's all for me. Thank you.
Thank you, Chang. My name is Lim Xiaoyun. Now, I would like to continue my presentation with the ratio analysis. The first ratio is known as liquidity ratio. Overall, both Padini Company and Supermax Company have increased in current ratio from 2017 to 2020. But Padini Company has shown a higher current ratio than Supermax Company in 2020. This means that Padini Company is more liquidate to settle the obligations in a shorter period than Supermax Company. Next, for the graph, the inventory turnover for Padini Company has decreased while Supermax Company has increased from 2017 to 2020. Besides, Supermax Company has recorded a higher inventory turnover than Padini Company in 2020. This indicates that Supermax Company has less chance for the inventories to become obsolete than Padini Company. After that, Padini Company has shown an overall increase while Supermax Company has shown an overall decrease in days in inventory from 2017 to 2020. Besides, Padini Company has a higher days in inventory than Supermax Company in 2020. This means that Supermax Company uses a shorter period of time to clear off their inventories than Padini Company. In general, the accounts receivable turnover for both companies has increased from 2017 to 2020. Besides, Padini Company has a higher accounts receivable turnover than Supermax Company in 2020. This means that Padini Company is more conservative about extending its credit to customers and is more efficient with its collection practices. Next, in overall, the average collection period for both companies has decreased from 2017 to 2020. Besides, Supermax company has shown a higher average collection period than Padini company in 2020. This means that Supermax company is less efficient in collecting money from their customers. Now, let's move on to the second ratio, solvency ratio. Overall, the debt-to-equity ratio for both companies has increased from 2017 to 2020. Besides, Supermax company has a higher debt-to-equity ratio in 2020, whereby it has been more aggressive in financing its growth with debt compared to Padini company. After that, we can see that both companies have shown an overall increment in debt-to-assets ratio from 2017 to 2020. Besides, Supermax company has a higher debt-to-assets ratio than Padini company in 2020. This means that Padini company has more funds to meet its current debt obligations than Supermax company. Next, in overall, free cash flow of Padini company has decreased while Supermax company has increased from 2017 to 2020. Besides, Supermax company has a higher free cash flow than Padini company in 2020. This means that Supermax company has more cash generated in each year to clear off all internal or external obligations than Padini company.
Thanks, Ling Xiaoyi. My name is Liu. Now I would like to continue my presentation, which is profitability ratio. From the graph, we can see that the whole trend of return on common stockholders' equity for Padini has decreased, while the trend for Supermax is increasing. In 2020, Supermax company has shown a higher ROE than Padini. This means that Supermax is more attractive as it creates more value for the shareholders. Next, we can also see that the trend of return on assets for Padini has decreased when it is increasing for Supermax. In 2020, Supermax has also recorded a higher ROE than Padini. This indicates that Supermax has a better performance as far as finance and operation of the company is concerned. Moreover, the trend of profit margin for Padini has decreased when the trend for Supermax is increasing. Supermax has recorded a higher profit margin than Padini in 2020, which means that it can generate more profit from its sales. Next, we can also obviously find that the trend for asset turnover for Padini has decreasing, whereas for Supermax it is increasing. Besides, Padini has recorded a higher ratio than Supermax in 2020. This happened maybe because Supermax made large assets purchases in anticipation of higher growth. For gross profit rate, the trend of Padini company has increased when the trend of Supermax has decreased. In 2020, Supermax has also shown a higher gross profit rate than Padini. This indicates that the Supermax company has more cash to pay for other indirect costs such as interest and one-time expenses. Through the graph, we can find that the earning EPS per share for Padini has decreased, whereas for Supermax it has increased. Supermax has shown a higher EPS than Padini company in 2020. It is because investors will pay more for Supermax company shares as it has higher profits relative to its share price. Then, for the payout ratio, from the data given, the trend of Padini has increased, whereas Supermax is decreasing. In 2020, Supermax has shown a lower ratio than Padini, which show that maybe Supermax company prefer to choose to reinvest the bulk of its earnings into the expanding operations. Based on liquidity ratio analysis, we can see Supermax is better in managing its cash position from its shares and collecting debts. Supermax also more able to meet short-term obligations. Based on the data available, most of the analysis shows that Supermax has a better future perspective and sustainability compared to Padini. So, in conclusion, Supermax company will be a better choice for long-term investors to invest. Our objective has been achieved through the analysis in this report. That's all from our group. Thank you.